Good evening, good morning, good afternoon, depending on where you're connecting from. You're welcome to today's live stream. Can you hear me? If you can hear me, let me know in the comment section. If you can hear me loud and clear, let me know in the comment section. I want to believe you had a great weekend. How are you doing? Please, if you can hear me loud and clear, I want you to drop it. You can hear me loud and clear. Good evening, Mr. Raphael. Good evening. How was your weekend? If you have any pair you want us to look at together tonight, please drop it in the comment section. If there's any pair you want us to look at together, drop it in the comment section. Mr. Peps, I see you. Evening. I want to believe you guys can see my screen. Can you see my screen? If there's any pair you want us to look at together, drop it in the comment section. Okay, so let's start by looking at the calendar. After looking at the calendar, we look at DXY, then we go to currency pairs. Okay, so today is 16th to 22nd of March. All right, USD CAD, USD CHF, and USD JPY. Okay, so let's look at the calendar. Let's look at the fundamentals before we go to the chart. Okay, so tomorrow is Monday. Core retail sales, United States core retail sales will be released tomorrow by 1:30 p.m. Okay, and the previous is 0.4%. The forecast is 0.3% from negative to positive. It means they are expecting an increase. They are expecting an increase for core retail sales, and for retail sales, the previous is 0.9%, and the forecast is 0.6%. Okay, so they are expecting increase for core retail sales and retail sales. So we should expect high volatility on USD pairs between from 1 p.m. Nigerian time. We should expect high volatility. So I will be taking my first trade after this news is released. My first trade, that will be in New York session. That is when I will be trading GBP USD and Euro USD. Those are the pairs I will be trading tomorrow. Those are the pairs I'll be trading tomorrow. And I'm going to execute the trade after this news is released. After the news is released. That is when and on Tuesday, CAD in their CPI data by 1:30 p.m. And you can see the previous and the forecast value here. Okay, so wait for the actual data to be released. If it is positive for the CAD, we'll be buying CAD. We'll be buying CAD if it is positive for CAD, and if it is negative for CAD, we will sell CAD. It means if we're going to trade pairs that have CAD as the counter currency, if the data comes out positive for CAD, we will sell those pairs that have CAD as the counter. Example is USD CAD, Euro CAD, okay, GBP CAD. Okay, and if it comes out positive for card, then you'll be considering buying pairs that have card as the base currency. For example, card JPY. Which other pair has card as the base? I think it's only card JPY. I think it's only card JPY that has a card as the base. I think it's card. Okay, card CHF. We have card CHF also. So if it is positive, that will be buy for pairs that have card as the base currency. Okay, so we should expect high volatility on card pairs on Tuesday. And on Wednesday, JPY. Several major news will be released from JPY. So if you're considering trading JPY this week, I would advise that you wait for this news to be released before you trade JPY pairs. That is my advice. This is an high impact news, so you have to wait for this news to be released before you trade JPY pairs. Trading JPY pairs before this news release is at a higher risk. Wait for this news. If you want to trade GBP JPY, Euro JPY, US JPY, wait for this JPY news to be released. Okay. Then same on Wednesday, FOMC. FOMC news will be released. So if you're trading USD pairs between Monday and Wednesday, ensure you exit by Tuesday. Close your trades by Tuesday. You're advised not to trade FOMC. Okay, you're advised not to trade FOMC. So if you if you execute a USD trade on Monday or Tuesday, ensure you close the trade before FOMC. Okay, close your trade. FOMC will be released by 7 p.m. So on Wednesday, you're advised not to trade USD pairs. Okay, that's that. I'm sharing my plan with you guys. I wouldn't be trading USD pairs on Wednesday. Okay, I would have to wait for FOMC news to be released before I will consider trading USD, and that will be on Thursday. So on Thursday, we have just one major news coming from the United States: unemployment claims. Okay, so on Thursday, that is when you should consider trading USD pairs. Okay, you either trade it Monday, Tuesday, or Thursday. Okay, then on Friday, okay, on Thursday also we have a major news. So if you are considering trading Australian dollar pairs, I would advise you wait for this employment change and unemployment rate to be released before you trade Australian dollar pairs, like Australian dollar USD, Australian dollar JPY. Okay, so I'm sharing my trading plan with you guys. On Monday, Tuesday, I will trade USD pairs. Okay, I'll trade USD pairs on Monday, Tuesday. Then on Wednesday, I would be trading. I wouldn't trade on Wednesday. Then on Thursday, Australian dollar pair. That's the pair I'll be trading on Thursday. Australian dollar pairs. Okay. Then also GBP, Great Britain pounds will be releasing claimant count change. Okay. So on Thursday, I will trade GBP USD or Australian dollar USD. Those are the pairs I'll be trading on Thursday. Okay. Then you could also consider trading Swiss franc. Okay. I don't trade Swiss franc. I don't trade Swiss franc. But if you're trading Swiss franc, Thursday will be a best day to trade Swiss franc. We have several major news that will be released from Swiss franc. Okay, so that's my take. Then on Friday, card those will be released on Friday. So you should also consider trading USD pairs. Okay, USD card will be very volatile on Friday. Okay, so as you can see, core retail sales for United States will be released on Monday, and the core retail sales for Canada will be released on Friday. So if, for example, the USD core retail sales is positive and on Friday core retail sales for card is negative, then you should consider buying USD card. Are you getting me? You should consider buying USD card if the retail sales for card is negative and that of the US is positive. If that of the US is negative and that of the card is positive, then you should expect selling USD CAD. Okay, this week will be a very volatile week, and volatility, when there's volatility in the market, there is great opportunity to make money. There's great opportunity to make money. There's also the risk also is high, is increased. Okay, so you just have to know what you're doing. You have to manage risk like a professional. You don't gamble in the market. If you gamble in the market, you will lose money. You've got to know what you're doing in the market. I hope you guys are still here. You can hear me. Are you still here? Are you still here? Are you still here? Can you hear me? Can you hear me? Okay, so um, let's see DXY. Let's see DXY. Okay, so this is DXY chart. This is DXY chart. My bias on DXY still remains bearish. Okay, my bias on DXY still remains bearish. I want to see DXY come fill this sell side imbalance, this buy side imbalance, sell side inefficiency. Yeah, buy side imbalance, sell side inefficiency. I want to see price come and fill this gap. That is my take on DXY. Now, this is the weekly time frame. Last week candle, as you can see, it's closed. It looks like an hammer, right? It looks like an hammer indicating change in trend from bearish to bullish. Let's go down to daily. What do we have on a daily? So you can see on a daily, the reason I would be going bearish on the daily, though we have a pattern that looks like a bullish reversal pattern on the weekly. What can we see here on the daily? The reason I would be going bearish on DXY is this pattern we have here. This pattern we have here, we have what looks like an inverted hammer here. Most retail traders would have executed buy, they would have gone bullish on DXY. But what I see here is this: DXY couldn't push price above this level, and that is why my bias still remains bearish. DXY didn't break the high of this candle. Can you see that? DXY didn't break the high of this candle. This was Tuesday candle. Yeah, Tuesday candle. You can see, and it has created a resistance here. This level is now a resistance area, or you call it your resistance zone. So it's the reason my bias for DXY is still bearish. You can see. So we have, like, this is a supply zone, or you call it your resistance zone. Okay, now let's go down to 4 hour. What do we have on 4 hour? Let's see what we have on 4 hour. Okay, so you can see what we have on 4 hour. Can you see this pattern? What pattern is this? This is an engulfing pattern. This is an engulfing pattern on 4 hour time frame, a bearish engulfing pattern. Can you see that? Okay. Now, I think after the formation of this engulfing pattern, a fair value gap was created. So there's a high probability price will pull back to fill the fair value gap before going bearish. Okay, there's a high probability price we want to pull back to fill the fair value gap before going bearish. Now let's go down to 1 hour. Let's go down to 1 hour. So you can see that a fair value gap was created on 1 hour. You can see this fair value gap that was created. Let's go to 15 minutes time frame. So price is likely going to come fill on 15 minutes. There's the fair value gap. Okay, we have one here. You can see this fair value gap on 15 minutes. Okay, price tested that gap, did fill it completely at this point. Okay, we also had a fair value gap here. We had a fair value gap here. And you see this fair value gap, though this gap has been filled. Right, you can see this fair value gap. So I want to see price pull back, fill this gap, probably come fill this gap before going bearish on DXY. That's my expectation on DXY. Price is going to pull back, create a new high, okay, above this level, or fill this gap before going bearish. That is my expectation on DXY. Okay, you can see this value gap on 1 hour, so we work with this gap. You can see this gap. It needs to fill this gap. If it doesn't fill this gap, we identified on 15 minutes time frame, it's going to fill this gap, this fair value gap. That's my expectation before going bearish on DXY. I hope that is clear. So that's expectation. You can see that DXY has been in a range for some time. Okay, it has been in a range for some time. So that's my expectation on DXY. I'm still bearish on dollar index. I hope that is clear. Okay, so let's look at Mr. Pep says we should look at USD card. Okay, Mr. Pep says we should look at USD card. Okay, Mr. Raphael, you're the first to join and comment. You are the first to join the meeting, and also you're the first to comment. So after the class, send me your MTN number. Let me forward data to you, Mr. Raphael. Okay, I'll forward data to you. Just send me your MTN number. Okay, so Mr. Raphael, also because you are the first person to join, I'm going to attend to your question. Okay, USD CHF and USD JPY. Okay, so let's go to the charts. Okay, so let's start with GBP USD. Let's start with GBP USD. Mr. Wale, I can see you. Mr. Victor, I can see you. Michael, I can see you. Evening to you all. Okay, so let's start with GBP USD. What can I see on GBP USD? We'll start with the weekly time frame. To know the trend for the week, we have to see how last week candle closed. Okay, so you can see last week candle closed bullish, right? What pattern is this? This is a spinning top. This is a spinning top. Okay, and the spinning top indicates change in trend from bullish to bearish, right? A spinning top indicates change in trend from bullish to bearish. But as you know, because this spinning top is a bullish spinning top, we have to wait for the next candle to close bearish before we sell, right? That is the rule of trading with candlestick patterns. A bullish spinning top, when a bullish spinning top forms, we wait for the next candle to close bearish before we sell. So it means that if we are just focused, if we're just working with the weekly time frame alone, we would have to wait for this week candle to close before we make a decision on GBP USD, right? But as day traders, we don't want to wait for the weekly candle to close. So what do? We need to go down to lower time frame to identify the candlestick pattern that formed on a lower time frame. If we go down to daily time frame and we are able to identify a bearish reversal pattern on a daily time frame, then we might consider going bearish on GBP USD. So let's go down to daily and see the pattern. So on a daily time frame, you can see the pattern we have here on a daily time frame, right? What pattern do we have here on a daily time frame? These are spinning tops, right? These are spinning tops. Now, most retail traders would have jumped in, right? Most retail traders will be considering selling. But if you look at the structure on the weekly time frame, what structure do we have on a daily time frame? Can someone tell me what structure do we have on a daily time frame? What structure do we have on a daily time frame? What structure do we have? What is the trend on a daily time frame? Someone should please tell me. What can you see? What is the structure? What is the trend on this daily time frame? Is it bullish or bearish? Is it bullish or bearish? What is the trend? Is it bearish structure? Is it a bullish trend or bearish trend? I want to know. Good. Victory said bullish. The structure we have here is a bullish structure. It is a bullish structure. So when a candlestick pattern forms like this, it could be a false setup because this is against the trend. this pattern is against the trend. Are you getting me? Are you getting me? This is what is against the trend. This pattern, this is a bearish reversal pattern, but the trend is bullish. Okay, the trend is bullish, the structure is bullish. Mr. Pep said bullish. Okay, so we should be looking for buy and not sell. Mr. Mayor says bullish. Yeah, you all are correct. It's a bullish structure. Okay, so this is a bearish reversal pattern, right? Most retail traders would have jumped in, and where would they have their stop loss? Where would most retail traders have their stop loss? Their stop loss would be here. Okay, so this high now is an area of liquidity. Now, another reason I would be going bullish on GBP USD is this. This was Wednesday candle, this was Thursday candle, this was Friday candle. Now you can see that the Friday candle didn't close below the low of Wednesday candle. Can you see that? If Friday candle had closed below the low of this candle, we could say, okay, there's a shift in market structure. But the fact that the market has not closed below the low of this candle tells us that the trend is still bullish, the structure is still bullish. Are you getting me? If the bears were able to close price below this low, one might have considered going bearish. But the fact that they couldn't close below the low of Wednesday candle indicates that we still have more demand. There is more demand than supply. We still have more buyers in the market than sellers. You can see that this level was also a support, a resistance turn support. Can you see that? This level was also a resistance which became a support, and you can see how the market reacted to that level. When price tested that level, it tested it at this level, there was a rejection. This one attempted, there was an attempt to test that level. Okay, this also tested this level, and there was a strong rejection from that level. This tells me that there are still more buyers in the market. Okay, so let's go down to 4 hour. After the close of Friday candle, what pattern do we have on 4 hour time frame? Let's see. So you can see the pattern we have here on 4. This is 4 hour time frame. Now a fair value gap was created here. You can see this fair value gap. Okay, this was a fair value gap that was created here. So okay, can you see this? This is a fair value gap. Price has tested this fair value gap, but it didn't fill it completely. So I think on Monday they might want to come and fill this gap, because a lot of retail traders would have executed buy after the formation of this candle. Many retail traders would have executed buy, and there are stop losses. This is an area of liquidity. Okay, their stop losses is residing at this low. So there's a high probability they will come and clear this low before going bullish. Okay, that's what I see on GBP/USD. Okay, so they might want to pull price back to clear the liquidity residing at this relative equal low before going bullish. I hope that is clear. So that is my take on GBP/USD. My bias on GBP/USD is still bearish. It is still bearish, but before taking a buy trade on GBP/USD, I want to see price pull back to fill the fair value gap that was created. Okay, I want to see price pull back to fill the fair value gap that was created. Sorry for that break. The network is not stable. Can you all hear me now? Can you all hear me? Sorry for that break. Okay, so this is what we have on 15 minutes time frame. This is what we have on 15 minutes time. So I want to see price pull back to clear liquidity before going bullish on GBP/USD. And if you go up to, let's say this is 4 hour, let's go to daily. Okay, so you can see on a daily or weekly. Let's go to weekly. You can see a fair value gap here on the weekly time frame. So it's likely GBP/USD want to come and fill this gap before going bearish. GBP/USD would want to come and fill this gap before going bearish. So this will be my target for this week. This will be my target for GBP/USD this week. I hope that is clear. That is my take on GU. I am bullish on GU this week. Bullish. GU bullish. Okay, let's look at on USD card. That's from Mr. Joseph. USD card. USD card. Okay, I think USD card has been in a range for some time. Let's start with the weekly time frame. So you can see how last week candle closed. This is a bearish reversal pattern. This is a bearish reversal pattern on USD card. So you should be considering selling USD card. Okay, this is a bearish reversal pattern. This is a resistance zone. Okay, this is a resistance zone on USD You can see it. Can you see it? Resistance, 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 resistance. Can you see that? This is a key resistance zone. You can see it. Price tested that resistance, strong rejection from there, came down, tested it again, strong rejection from there. You can see because this level was a resistance in the past, strong resistance. Can you see that? Okay, so my bias on USD card is bearish. Let's see what we had on 4 hour. You can see last Friday candle closed below support. When the market closes below a support, it tells you there is more supply than demand. There is more supply than demand. And when supply is higher than demand, you should expect price to drop. So last Friday candle closed below this support. Okay, so let's go down to 4 hour. So this is what we had on 4 hour. Okay, this is what we had on 4 hour. See, a fair value gap was created here on 4 hours. So before you sell, wait for price to fill this fair value gap. Wait for a pullback. Wait for pullback to this zone. Or let's see if we have another fair value gap above this one on 4 hour. Okay, so I think we have one here on 1 hour. Wait. That's my take. Wait for price to fill this fair value gap. Okay, wait for price to fill this fair value gap before you consider going bearish on USD card. My bias for USD card is bearish. My bias for USD card is bearish. Okay, USD card is bearish, GU is bullish. Okay, let's look at USD CHF and USD JPY. USD CHF. It's really been a difficult market. You guys, can you see USD CHF? Its movement has been it's been choppy. It's been choppy. Price action on USD CHF since the 7th of March has been choppy. This would have been a difficult market for those who trade USD CHF. It would have been a difficult time for those trading USD CHF. You can see it's been choppy. So let's start with the weekly. Okay, so this is what we have on the weekly. I think it's still updating. Still updated. Yeah, it's updated. So this is what we have on. So price just tested the support on USD CHF. Okay, price tested this support. You can go back here, you will see it's a support. Then we had the resistance there, which became a support. Price tested that level, and there's a strong rejection from that zone, right? From that level, strong rejection. Okay, so let's go down to daily. What do we have on a daily time frame? So this is what we have on a daily time frame. So what structure do we have on a daily time frame? Can you tell me the structure we have on a daily time frame? Can you tell me the structure we have on USD CHF? Is it a bearish structure or a bullish structure? On a daily time frame, what structure do we have on a daily time frame? Bullish or bearish? Please, I would like to know what structure can you see on USD on USD CHF? What structure can you see on USD CHF? I'm waiting for your response. What structure is this? What structure? What structure is this? Bearish, good. Bearish, 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 bearish. You are correct. It's a bearish structure. It's a bearish structure. So this is just a pullback. This is just a pullback. Probably a fair value gap was created here. Okay. A fair value gap was created here on a lower time frame. Let's go and identify the fair value gap. Okay, you can even see it on daily. This is the fair value gap that was created on a daily time frame, and that is the reason for the pullback. You can see how you can see. Can you see? Price has filled this fair value gap that was created on a daily time frame. It has filled it. So there's a high probability for price to drop from this zone. From this zone, there's a high probability. This fair value gap has been filled completely. So there's a high probability for price to drop from that zone. Okay, so after price has filled this fair value gap, we want to ensure that a bearish reversal pattern form. Okay, after price fills this gap, so we'll go to 4 hour. Let's see the pattern that formed on 4 hour. Okay, so you can see the pattern we have on 4 hour. This is a shooting star. Okay, this is a shooting star. This is a shooting star. Can you see this? This is a shooting star on 4 hour time frame. Now on 4 hour time frame, we have a fair value gap here. Okay, we have a fair value gap here that has not been filled. They might want to try fill this gap. Okay, they might want to try because a lot of retail traders would have executed sell after the formation of this shooting star, and their stop losses will be residing at this previous high. So there's a high probability they want to clear liquidity, sweep liquidity residing at this previous high, and because there's a fair value gap above this previous high, they might also want to fill this fair value gap. That is my take. That is my take. Okay. So if I want to take a trade on USD CHF, my stop loss, if I decide I want to take a trade from the current market price or when market opens, my stop loss will be at this level. It's about 60 pips. Okay, which I think is too much. The risk is too much. So you should patiently wait for sweep of liquidity. Wait for liquidity sweep before you consider selling. If you don't want to wait for price to fill this gap, wait for there's a high probability they would want to clear the stop losses residing at this high before going bearish. And if you are selling from this zone or above this high, see there are a lot of stop losses residing at this. All these areas are areas of liquidity. All these lows are areas of liquidity. All these lows. So once they hit this level, if they're able to push price up to this level, they are coming for all these stop losses. So if you are selling from above this area, your take profit should be, you could use this as your take profit or this low as your take profit. That's my take on USDCHF. My bias on USDCHF is bearish. It is bearish. It is bearish. Okay, it is bearish. Okay, so that's my take on USDCHF. Which other pair? GJ. GJ. GJ is a buy. GJ is a buy this week. But like I said, wait for the major news that will be released from Japan on Wednesday. I think it was on Wednesday, yeah. The news will be released from Japan on Wednesday. Wait for that news before you trade JPY pairs. GJ is bullish on Wednesday. Wait for that news to be released before you trade JPY. I expect more bullish move on GJ. Okay. So my take on GJ. Okay, so this is GJ. So let's start with the weekly time frame. Okay, so you can see last week candle closed bullish. Okay, it closed bullish and it closed above a resistance level. You can see this resistance. Okay, last week candle closed above this resistance level. You can see also if you go back here, we had resistance, resistance, resistance. So GJ is currently trading above this demand zone. You can see this is a demand zone. GJ is trading above this demand zone. Okay, that tells me that we have more demand than supply. That tells me we have more demand. Like I said, when price breaks a resistance level, it indicates that demand is higher than supply. We have traders who are willing to buy GJ, okay? They are willing to buy Great Britain pounds, okay, and sell JPY. They are buying Great Britain pounds to sell JPY, okay? So that's my take. Based on the weekly candlestick pattern, GJ is bullish. Let's see what we have on daily. Daily also, you can see this was Thursday, Wednesday. I think the market closed above. You can see this resistance level. This was a resistance level. You can see resistance, resistance, and the market still closed above this zone, supply zone. Tells me demand is higher than supply. Okay, so on 4 hour, what do we have on 4 hour? You can see what we had on 4 hours. See what played out here on 4 hour. After this bearish move, price went back up. Okay, there was a pullback, and what happened? See what played out here. Let me show you what played out here on GJ. After this bullish move, price came back to fill a fair value gap. A fair value gap was created here, and that was the reason for this pullback. Let's go to 1 hour to identify the fair value gap that was created. Let me show you. You can see the fair value gap that was created on what time frame is this? 1 hour. I think that this was the reason for that pullback. Let's see. Let's confirm. Can you see it? This pullback you saw here is because of this fair value gap. They came, fill this fair value gap. You can see, and after filling the fair value gap, what candlestick pattern formed here? This is an hammer. You can see. Then price went back up. Okay, it went back up, created a fair value gap here. What happened? Price had to, you see, it created a fair value gap here. What happened? Price came back, filled that fair value gap. Can you see it? Can you see the fair value gap? It came back, filled the fair value gap. And this fair value gap, if you apply your Fibonacci, you would see that the fair value gap is at where? Is at discount, right? You can see 61.8, below 61.8. That is extreme discount. Can you see that? So what do we have here now? Push up. Then what else? What should we expect? What should we expect? We have a fair value gap here. Can you see this fair value gap? So we wait for price to come back, fill this fair value gap, then we should expect GJ to create a new high. It's going to come clear this high. That's my expectation. It's going to come clear this relative equal high. That's my expectation on GJ. So I will be considering buying GJ from this zone. Okay, I'll be considering buying GJ from this zone. I would expect this move to play out between Monday and Wednesday. That's my expectation. I would expect this bearish move, this pullback, to play out between Monday and Wednesday. That will be my expectation. That's why I said it's on Wednesday. After the news is released, I'll be considering buying GJ. Okay, so that's my take on GJ. GJ is bullish, GU is bullish, USDHF is bearish, USDJPY is bearish, USD CAD also is bearish. I hope that is clear. Is there any other pair you want us to look at? Let me know in the comment section. I think I've looked at all the pairs you guys are interested in. I think we've looked at all the pairs. Is there no gold trader in the house? Is there no gold trader in this meeting? You guys don't trade gold. You guys don't trade gold. I used to have many gold traders. What happened? You guys don't trade gold anymore. Let's look at gold. If you're interested in signals, all you have to do is fund your trading account with a minimum of $200 to have access to trade signals. Fund your trading account, your Aurum Capital trading account with $200 to have access to free trading signals. Okay, you would receive at least 3 trade signals every week. 3 trade signals every week. Okay, 3 trade signals, and out of that 3 trades, there is a high probability to win 2 trades. Our winning rate is 70%. So out of 10 trades, we are likely going to win 7 out of 10 trades, and our risk reward is very high, 1 to 2 risk reward. Okay, 1 to 2 risk reward. So if you are interested, you should subscribe to Signals. Okay. Good pass you. Good, not good. uh, you say experience is the best teacher. When we tell you that you should avoid gold, you say you want to trade gold. Experience is the best teacher. We'll let you go and trade gold. Okay. There's nothing wrong in trading gold, but most of you don't have much capital to trade gold. With your $50, $100, you're trading gold. There's nothing wrong. Gold is a good instrument, but you need good capital to trade gold. Gold is very volatile. Very volatile. If you are using 30 pips stop loss on currency pairs, on gold you'll be using close to between 70 to 100 pips on gold. 70 to 100 pips on gold. Gold is very volatile. So as you can see, you don't need anyone to tell you what is the structure. What structure can you see on gold? You don't need anyone to tell you the structure on gold. Gold has been bullish. Fundamentally, gold is bullish. Technically, gold is bullish. Okay. Fundamentally, gold is bullish. Technically, gold is bullish. So don't even consider selling gold. Okay. Don't consider selling gold. Gold is still very bullish. It is still very bullish. Gold is still very bullish. Last week candle. Okay, this is daily candle. Okay, so it closed strongly. This is a doji, right? That's a doji candle. Okay, it's a doji indicating change in trend from bullish to bearish. Okay, so after the formation of this doji, if you just focus on the daily time frame, if all you trade is the daily time frame, it means you have to wait on Monday. You have to wait for Monday candle to close bearish. You can't just jump in and start selling because a doji candle formed on the daily time frame. You have to wait for a bearish candle. You need a more confirmation before you sell, right? Because the doji candle does not confirm that we have more buyers than sellers, right? Doji is an indecision candle. This just tells us that we have equal number of buyers and sellers. That's what a doji indicates. We have equal number of buyers and sellers. You get it. So it's not a confirmation for us to sell. The preceding trend is bullish. The buyers might still push price up. The bullish trend might just continue, right? So before we sell, we want to ensure that a bearish candlestick forms. Okay, so let's go to 4-hour. Let's see what we had on 4-hour time frame. So you see the reason why my bias remains bullish for gold. You see the reason? Can you see the reason? The sellers could not close the market below the low of this bullish candle. Can you see it? The sellers could not close the market below the low of this candle. This tells me that there are still more buyers. We still have more buyers than sellers. And you can see the pattern that formed on the 4-hour time frame. This is a spinning bottom. A spinning bottom that formed at a support level. Let's say on 1 hour. You can see what formed there on 1 hour and 4-hour. Can you see that? Can you see the pattern that formed? This is a support zone. Price has tested that level several times. Can you see that? So this tells me gold is still very bullish. If gold closes above this resistance it's created here, it's going to go for this high. It's going to go for this high. It's going to go for this high. So gold is still very bullish. It's still very bullish. Okay, it has created a fair value gap here. So you might want to wait for price to pull back to fill that fair value gap it created here. This fair value gap before you consider buying. This fair value gap. Wait for price to pull back to fill this fair value gap. So you should be considering buying after this gap gets filled. I hope that is clear. I hope that is clear. So my bias on gold this week remains bullish. Still bullish. Is that clear? So I think Euro also will be the last pair we'll look at. Okay, if you have questions, I would attend to your questions. So let's look at Euro Aussie. Euro Aussie. Euro Aussie. My bias for gold is bullish this week. My bias for gold is bullish this week, and I've shared my expectations on gold. I just shared my expectations on gold. We should wait for price to pull back, okay, to a discount area before we buy. Okay, so you can see Euro Aussie last week candle closed strongly. It's a shooting star. Last week, shooting star. I believe this bullish move was to clear all the stop losses residing at this high. They've cleared all the stop losses residing at this high. And after clearing liquidity, what pattern formed? A bearish reversal pattern. This is a shooting star. This is a shooting star. Now, if you're just working with the weekly time frame, you would have to wait for the next week for this week candle to close, right, before you sell. You have to wait for this week candle. That is the rule, because this shooting star is a bullish shooting star. The body of the candle is bullish. We can't just jump in and start selling. For us to sell, a bearish candle must print. Right? A bearish candle must print before we sell. This has not confirmed that we have sellers in the market. Okay, so let's go to daily. Let's see what we have on daily. So you can see what we had on daily. Right? This is a bearish reversal pattern. Right? This is a bearish reversal pattern. Why? First, this bearish candlestick closed below the low of this bullish candle. Because I know some of you might want to be arguing that this is not a bearish reversal pattern, right? We can't call this a shooting star, right? We can't call this a shooting star. But the fact that this bearish candlestick closed below the low of this candle, it's an indication that supply is higher than demand. It indicates that we have sellers in the market now. Okay, that's what it indicates. This pattern you see here. Okay, then also it created a support here. That was Thursday candle created a support here, and on Friday the market closed below that support level. That's a strong indication that there are more sellers in the market. There are more supply in the market. So on Euro Aussie is likely going to come fill all this liquidity void. This liquidity void. We have several fair value gaps here. There is a high probability that Euro Australian dollar will come and fill all this gap before going bullish. Okay, so let's go down to 4 hour. I'm sure a fair value gap has been created. So you can see the pattern we had on 4 hour also. Can you see this pattern? Can you see this pattern on 4 hour? Then on 1 hour. Okay, so you can see this fair value gap on 1 hour. For me to sell Euro Aussie, I want to see Euro Aussie pull back to this zone. I want to see Euro Aussie pull back to this zone. This is where this would have been the best price to start selling Euro Aussie, right? This is what? This is a spinning top, a bearish spinning top. And when a bearish spinning top forms, you don't wait for the next candle to close before you start selling. You don't wait. You execute a sell trade after the bearish spinning top. So this would have been the best time to sell. Now, if we had not sold from this point, why would you want to sell from this point? If you had entered sell from this point by now, you should have taken profit. The market would have hit profit because your risk here is about, let's say you even took a risk of 30 pips, 30 pips risk, and you went for 60 pips. By now, you should be out of the market. So it will be wrong for you to take a sell trade. If I want to take any risk on Euro Aussie at the moment, it will be a buy trade. All I need to do is wait for a bullish reversal pattern to form. As you can see, a bullish reversal pattern has not formed. If a bullish reversal pattern forms on Euro Australian dollar, I could consider buying into this zone and look for sell after these gaps get filled. But I cannot sell at the current market price. If a bullish reversal pattern forms, I would rather buy than sell from the current market price. You cannot sell Euro Aussie. Even if price keeps dropping from this current market price, it will not be wise to sell from this point. If price even decides to keep dropping, to continue with this bearish move, it will not be wise to sell from the current market price. Because if you sell from this price, your stop loss, this will be the reasonable level to use as a stop loss. This is about 106 pips. 106 pips. So you don't want to take such risk, right? You don't want to take such risk. Why not wait for price to pull back to this zone? If price pulls back to this zone and you take a sell, your stop loss is at this level. So your risk would just be like 40 pips. So why would you want to risk 106 pips? Why would you want to risk 106 pips? Can you see that? You just risk 40 pips if you patiently wait for price to pull back to this zone. Mr. Amuda, evening. You just joined the class. Evening. You all are welcome. You are welcome. Thanks for joining. Please, if you're yet to like this stream, please give it a thumbs up so that others can get to see this video. And if this is your first time participating in the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. You get notified by YouTube. Okay. So that's my take on Euro Australian dollar. My bias for Euro Australian dollar is bearish. Okay. I hope that is clear. Any question? Any question? Any question? I want to type my bias for you guys to. Okay. My bias, weekly bias. For those who just joined. Bullish, GU, AU, AU, EU, NU. That's my bullish bias. Then I said GJ also. GJ, DJ, then bearish, UCAD, UCHF, Euro Aussie. Okay, so those are the pairs. I would be trading just GU and EU. GU, EU, GJ. Those are the pairs I'm going to trade this week. And Euro Aussie also. Euro Aussie, GU, AU, GJ, and Euro Aussie. Those are the pairs I will be trading this week. Okay, those are the pairs I'll be trading this week. Okay. And like I've always advised, every trade you execute, ensure that the risk reward does not go below 1 to 1.5. If you want to be a profitable trader, ensure your risk reward does not go below 1:1.5. For every $1 risk, you should expect to make a profit of $1.5. You cannot be risking $1 for 50 cents profit. That is why many of you are struggling in the market. Your risk is always higher than the reward. Your risk is always higher than your reward. That is why you are struggling in the market. Okay. If you are trading with a 1:2 risk reward, You're trading with 1:2 risk reward with a winning rate of 40%. If you have a bad system and your winning rate, let's say, is 40% with a risk reward of 1 to 2, you will still be profitable. So let's say you're trading with 1:2. This is the secret of successful trading. Okay. Let's say your winning rate is 40%. That is, let's say your system is very poor. If your winning rate is 40%, that means out of 10 trades, 10 trades, you win 4 trades. Out of 10 trades, you win 4 trades. 4 trades and you lose 6 trades. If you lose 6 trades and for every loss you lose $1, 6 trades, that will be $6, right? That will be $6 loss. And if you win 4 trades, you're risking for every profitable trade you make $2 and you win just 4 trades. 2 times 4, that is $8. That is $8. You are still profitable at the end of the day. You are still profitable. This will be $8 profit. $8 profit. So if you keep doing this, you will definitely be profitable in the long run. But most of you, you are risking $1 and you are aiming for 0.5%. 0.5, 50 cents. You are risking $2. You are aiming for $1. You risk $10. You see $5, you close it. You risk $20, you see $2, you close it. You can't be profitable. You can't be consistently profitable if you're trading like that. When it comes to trading, this adage that says a bird at hand is more than 10,000 in the bush, it doesn't work in the market. Okay, so let your profits run and cut your losses short. Cut your losses short, let your profits run. But most of you let your losses run and you cut your profits short. That's what most of you do. I don't care what strategy you're trading with. If you apply 1 to 2 risk reward, you'll be profitable. That's the only thing you need to change in your system, in your strategy. That's the only thing you need to change to be profitable. Let the trade run 1 to 2. Okay, 1 to 2. Now, most times the market will not even get to your to 2. It will not give you the reward. Okay, it might not eat your take profit. Sometimes if you are risking 30 pips, if you risk 30 pips and your profit target trading with 1 to 2 is 60 pips, sometimes the market will get to 40 pips and reverse. Okay, sometimes the market will get to 40 pips and reverse. So what do you do in such case? You trail your stop loss. Since your risk is 30 pips, immediately the market goes in your direction, 30 pips, reduce your stop loss, take it to break even. Adjust your stop loss to break even. Once you adjust your stop loss to break even, there's no more risk on that trade. You're not taking any risk on that trade. Are you getting me? Adjust your stop loss. If it gets to 40 pips, adjust your stop loss to 10 pips above your entry price. So if price decides to pull back from 40 pips, you will still make 10 pip profit. That is how I trade. That's how I manage my risk. 30 pip, 60 pips, market moves in my direction 30 pips, I adjust my stop loss to break even. It moves to my direction 40 pips, I adjust my stop loss 10 pips above my entry level so that if price pulls back, I will still go on with 10 pips. And 10 pips could be $1, 10 pips could be $100, depending on the lot size you are trading with. 10 pips could be 1,000, 10 pips could be $10,000. It all depends on the lot size you're trading with. I hope that is clear, guys. I hope you got value from this session. I hope you got value from this session. I hope you got value from this session. Trust me, if you manage risk, you make profit consistently in this market. Most of you don't manage risk. You don't manage risk. I was once in that phase. I was once in that phase. Poor risk and money management. I struggled for many years, struggled, trying to figure out what is the problem. It was risk management. That's why today, if you give me any indicator to even trade with, any indicator, I will still be profitable because I've understand the concept of risk and money management. Give me any strategy, I will fix it. I will fix that strategy. I will make money with that strategy. Any strategy, give it to me. I'll work on it and I'll be profitable with it. So please manage risk. Yeah, see yourself as a risk manager. See yourself as a risk manager. Manage risk. Be more focused on preserving your capital. Be more focused on preserving your capital. Don't take unnecessary risk, please. I hate it. I hate it when people tell me they lose money in the market with all this knowledge available, with all that you're getting from these classes. You're still losing money. I feel so bad. I feel so bad. Please. A dollar now is about 1,006, I think. I think it's about 1,600. It's not time to be risking or losing money to the market. And like I told you guys, you should have maximum drawdown. Maximum drawdown, please. Daily drawdown. You should have maximum daily drawdown. Daily drawdown. You should have maximum daily drawdown. Have daily drawdown. That is the maximum amount you would lose in a day. You should have it in your trading plan. You should have weekly also, weekly drawdown, maximum weekly drawdown. You should also have monthly drawdown, and also you should have maximum drawdown on your capital. Okay, I've always advised if you lose 30% of your capital, take a break. Take a break. You might have to go back to a demo account. Okay, so let's say you have $200. Let's say you have $200. Let's say your capital is $200. Okay, if you are experienced, your daily drawdown should not exceed 5%. That's $10, right? 5% for experienced traders. Your daily drawdown should not exceed 5%. I think 5% is even too much with $200. Okay, you should be risking between 1 to 2% every day. 1 to 2%. Okay, with my strategy, your drawdown will be 2% if you're trading my strategy, because my stop loss is between 30 to 40 pips, between 30 to 40 pips. So your maximum drawdown must be between 2%. Yeah, 2%. That's 2% of $200. That will be $4. So you have your maximum daily drawdown as 2%. It means weekly you shouldn't lose more than 10%. And 10% of $200, that's $20. So it means that for you to lose your $200, it would take how many weeks? If you are risking 10%, which is $10 every week, for you to blow your $200, it would take how many weeks? 20 weeks. 20 weeks. And if you have a good strategy, it's not possible. You cannot lose for 20 weeks. It's not possible. It's not possible. Then your monthly drawdown will be how much? Monthly drawdown, if you're risking 2% every day, monthly drawdown should be around 30 to 40%. 30 to 40%. If you lose 30 to 40% of your account, you should take a break. Something is wrong somewhere. And you need to fix that before you get back to trading. You have to figure out what the problem is. If you lose 30 to 40% of your account, you have to figure out what the problem is before you come back to live trading. You might have to go to demo trading for some time. Okay? Because if you lose 30 to 40% of your account, the probability that you're going to blow that account is 80 to 90%. Anything that makes you lose 30 to 40% of your account, the probability that you're going to blow that account is 90%. Because by that time, your psychology is messed up. Your psychology is messed up. That's when you want to revenge trading. That's when you want to revenge trading. And if you do revenge trading, you'll keep losing because you can't fight the markets. You'll be fighting yourself. You'll be fighting yourself and you keep losing money. You won't be logical. You'll just be executing trade based on your emotions and not based on logic. So you keep losing money. Yes. 1:3. If your system is 1:3, 1:3 with even 30% winning rate with 1:3, you'll be profitable. That means out of 10 trades, if you win just 3 trades, you will still be profitable with 1:3. You will still be profitable with 1:3 because with 1:3, if you lose, let's say you just win 3 trades, 3 trades out of 10 trades, just 3 trades with 1:3, just 3 trades, you'll still be profitable. So for every loss, you lose $1. Let's say you win 7 trade, you lose 7 trade. Okay, if you lose 7 trade, that will be $7 loss, right? That will be $7 loss. Then if you win just 3 trades, each trade you win $3, $3 times 3, $9. You can see out of 10 trades, you lose 7, you won just 3 trades, and you are still profitable at the end of the day. You can see how powerful risk management is. A good risk reward. You can see how powerful it is. Any question? Any question? Any question? So I think that will be all for tonight's session. I think the market has opened, right? The market has opened, right? You can see this is Euro Aussie. It has opened. So Euro Aussie, if this candle closes bullish, it's likely going to come back here, fill this fair value gap. Okay. GG, you can see what they did. I think the first thing they've done now is to clear the liquidity, right? Okay, they've not cleared the liquidity. They've not cleared the liquidity. So market has opened. You can see GJ. Okay. Market has opened. You can see the gap here on Australian dollar USD. It's a gap on Australian dollar USD. Let's see. The little gap also on Euro USD. Let's see USD JPY. USD JPY too. A little gap on USD JPY. Let's see gold. Okay, gold has not opened. Gold will open by 11 p.m. Gold will open by 11 p.m. Okay, so that will be all. I really want to appreciate every one of you, Mr. Raphael, Mr. Joseph, Mr. Peps, Mr. Victory, Mr. Wale, Mr. Michael, Mr. Mayor, Mr. Amuda. I really appreciate every one of you for your participation. I wish you all a profitable trading week. Okay, just ensure that you trade the plan. Plan the trade and trade the plan. If you don't have a trading plan, you have planned to fail. If you don't have a trading plan, you have planned to fail. I wish you all a wonderful night. Mr. Raphael, send me a message on WhatsApp because you are the first to join the meeting and you're the first to comment. I have a gift for you. Send me a message on WhatsApp so that I can, your MTN number, please. MTN number so that I can send you data. Okay, so that'll be all for tonight's session. Tomorrow I'll be on. I'll come on tomorrow by 1 p.m. 1 p.m. I'll be on by 1 p.m. tomorrow. I wouldn't come on during London session or New York session because the major news will be released by 1:30. By 1:30, so I'll be on by 1 p.m. tomorrow. Let's see how the market will react to the fundamentals. I'll drop the link for the meeting tomorrow. Good night.